Among the new taxes that came into force this month was the digital services tax, charged at the rate of 1.5% on gross sales by online businesses. Minimum tax also came into the picture at 1% of sales made. What does this mean for small and medium-sized enterprises, and who exactly does these taxes target? To answer these questions, I earlier on talked to Charles Cheruiyot, who is in charge of policy and tax advisory at the Kenya Revenue Authority. This is how that conversation went. The Finance Act of 2020 came into law, and this means that there are some new taxes that have been introduced. Some affect individuals, others affect companies. Today we want to speak to Charles Cheruiyot. He is the manager in charge of policy and tax advisory at the Kenya Revenue Authority, to just discuss what these taxes are, especially for the companies. Thank you for speaking with us.
Thank you and welcome.
Thank you very much for having us. Now, could you just take us through what minimum tax for the companies is, the newly introduced minimum tax?
Minimum tax is a form of taxation that is actually geared towards bringing each and every other person who has business in Kenya to pay their taxes. Initially, we have had a number of under the old regime, where taxes are actually paid, because when it comes to issues of income tax, it's actually tax on income, and therefore a number of companies that have actually been making losses throughout the years, perpetual loss makers, have not actually been paying this nature their taxes in terms of the income, and therefore because taxes is actually charged on income, and for that matter they have not actually been paying their taxes, meaning that at the end of the day these companies are not actually contributing into the kitty in developing our country, and therefore the government has seen it wise that we introduce another form of taxation called minimum tax. Minimum tax is a tax that is based on turnover or the sales that has been made by a company or by a person over a period of 3 months. Okay. And therefore the basis is actually sales, and the sales that we are actually talking about is gross sales. So for instance, now if a person has made sales between the period January up to March of 100 or let's say 1 million Kenya shillings, so the minimum tax that will be payable by that person would be 1 million Kenya shillings, and the percentage of the minimum tax is 1%, meaning that at the end of the day this person will be required to pay around 10,000 Kenya shillings for purpose of that, in relations to that turnover that he has earned as minimum tax.
Okay, right. And who is this minimum tax targeting?
The minimum tax is targeting every person, and when I talk about a person, I mean these are corporate bodies who are in business, as well as individuals also who are in business, and therefore it is actually a tax for everyone who is actually in business.
Mm-hmm. Yes. And how different is it from, say, corporate tax?
No, minimum tax is not different from corporate tax, in the sense that minimum tax that is payable is actually a form of advance tax. It's a form of advance tax, because at the end of the day, after a person has concluded or made up his accounts, and he has determined the amount of taxes that he's supposed to be paying, now what happens is that the tax that he's supposed to be paying after the year end, that means a period of 12 months when he makes up his account. Now what happens is that he is supposed to take into considerations the amount that is actually paying on the actual tax arising from his income that he has earned, less the withholding or the minimum tax that he has paid over the period. And minimum taxes are payable on a quarterly basis. That means in the fourth month, after the fourth month, in the fourth month, the 6th month, the 9th month, and the 12th month. That means you have got to pay them in 4 installments.
So this tax now, the minimum tax, it's separate from turnover tax and the corporate tax, is that right?
Yes.
So is this not double taxation?
It is not double taxation. It's the relationship between corporate tax and minimum tax will converge at the point where, after determining the amount of tax that you are supposed to pay based on the profits that you have earned, say for instance in the year 2020 a company earned a profit from January up to December, a profit of, I'm still using 1 million Kenya shillings. Okay? Now, if it is taxable profit of 1 million Kenya shillings, the tax payable is at the rate of 25%. Meaning that if it is 1 million Kenya shillings, the tax that is supposed to be payable, which we in this case we refer to as corporate tax, is actually 250,000 Kenya shillings. That means it is 25% of 1 million Kenya shillings. And therefore it is 250,000 Kenya shillings. Now, assuming that this person, through his turnover over the 12-month period, he has paid minimum tax of 150,000. Meaning that at the end of the day, we have got to take cognizance of the amount of tax that this person is liable to pay in that year. That is 250,000 Kenya shillings. But is he required to pay the entire amount again at the end of the year? The answer is no. He will not be required to pay 250,000, because what happened is that he is already paid 150,000 Kenya shillings through the minimum tax process. Right. And therefore, then what he will only be required to do is actually to pay the balance. That is the difference between the tax that is supposed to be payable, 250,000 Kenya shillings, less the minimum tax that he has already paid by way of installments. Okay. Yeah, by way of 4 installments. That in this case is 150. So he's only supposed to pay now at the end 100,000 Kenya shillings being the balance.
Right.
Yes.
So this tax ideally is just for the expansion of the tax base. Am I getting it right?
Yes, it is. It is for the expansion, for purpose of expanding the tax base, because you find at the end of the day, some taxpayers would not have made profits. Okay. You get it? So, would not have made profits at all, unlike the person who actually made a profit of 1 million Kenya shillings, and therefore is supposed to pay 250,000 Kenya shillings as tax. Now, there is somebody else who actually made a loss of 1 million Kenya shillings at the end of the year. And therefore, that person who made a loss of 1 million Kenya shillings, as opposed to the person who paid, who actually made a profit of 1 million Kenya shillings, that person under the old regime, without the introductions of minimum tax, will not pay. Yes, therefore, those people who actually made losses at the end of the year have actually been told, assuming that the two persons, the person who made a loss and the person who actually made a profit, actually has the same turnover, meaning that the minimum tax that they have paid is the same. That is 150,000 Kenya shillings. At the end of the day, what now happened is that the minimum tax, the person who made a loss has already contributed into the kitty.
Okay.
Yes.
Right. So
everyone is actually paying their civic duty of paying taxes.
Right. That's very important. What is the process of filing for this tax, or for the payment of this tax?
Okay. You pay these taxes on a quarterly basis, meaning that your sales for a quarter period have to be, you have got to compute the sales for the quarter period, meaning that if you have sales for your quarter, that is the first quarter, assuming it is from January up to March, your sales is 1 million Kenya shillings. Okay, your sales is 1 million Kenya shillings, and therefore now in the fourth, that means in the come on or before 20th of April, on or before 20th of April, you are supposed to pay minimum tax, and in this case, minimum tax being 1% of 1 million Kenya shillings is 10,000 Kenya shillings. Okay, if it is the 10,000 Kenya shillings now, you will be required to pay that amount.
Well, are there incomes that are exempted from the minimum tax?
Oh yes, not every person who has business or who earns income is supposed to be subject to minimum tax. Right. Now, there are persons who are exempt from payment of taxes. These are people who have actually been specifically exempted from the payment of taxes. These are a group of people like NGOs, yeah, and any other person who has actually been exempted from paying taxes. And therefore, this is a group that is not required, even though they have received income, but by virtue of the fact that it is exempted, then they are not supposed to pay tax, the minimum tax. And there is also another category, employees. Employees also will not actually be required to pay minimum tax. That is in respect of employment income. But let me make it very clear that it is not because there are employees who are, in addition to their employment income, they have what we call a side hustle. They are also in business, isn't it? Now, if these persons are in business, then they will not be required. Okay, if they are in business and they are also earning employment income, they will also have to be required to pay minimum tax from their business side. And now, from their business side. And there is also another group of persons who are not supposed to pay, is those people who are earning rental income. Oh yes, the people who are earning rental income, that is what we call the monthly rental income. And therefore, this is a group of persons also who are actually exempted from the payment of minimum taxes. And there is also another group, as you have said, those people who are actually subject to turnover tax. And turnover tax are for those persons, or for those persons, when I talk about person, I'm talking about individuals as well as corporate bodies. So, but they are in business. Therefore, those people who are in turnover taxes, those who turn over at the end of the day earns between 1 million Kenyan shillings and not exceeding 50 million. This is a group of persons who are actually supposed to be liable to pay turnover tax. Now, and that is now another group of persons who are not supposed to do that.
Let's now talk about a very emotive tax that has come on board, the digital services tax. Could you just give us an overview of what it is?
Digital service tax, by its definition, is a tax on persons who are carrying out businesses through the digital or through the online or electronic means. Yeah, that is why we are talking about digital. And therefore, this is a tax on such persons. Now, who are they? Yeah, who are they? Because now, if you are actually carrying on business through the digital platform, then you are actually supposed to be subject to digital service tax. And the rate of this digital service tax is 1.5% of the gross turnover. That means of the gross sales. Right. Yes, what you actually earn from what a digital service provider earns is actually supposed to be subject to a tax called digital service tax, and this tax is actually subjected to tax. Okay, it is subjected to through by way of withholding. Yeah, that means the person who is making the payment is the person who is supposed to deduct that tax and remit to Kenya Revenue Authority. Yeah, because what happened is that the commissioner is empowered by law to appoint a person. That means every person who is actually making payment from the services that he has received from a digital service provider to deduct withholding tax, and the deductions is actually on the gross amount that is supposed to be payable. Now, who are the digital? Who is supposed to be subject to this digital service tax?
Yeah, because many people have been doing business online for quite a while. Many people have their own side hustles, or it's even their main hustle actually. So is it everyone who is online doing business?
Not everyone who is doing business through online. You know, okay, it is only digital service tax is arising from those from the platform owners, those people who are actually platforms, providing a platform for purpose of meeting where sellers and buyers meet, yeah, online to carry out business transactions. And therefore, this is a group of persons whom we look at in terms of those people who provide the platforms. You look at it, for instance, the bloggers, the digital or the web hosters. Yeah, those people who are hosting other persons through the web. We are talking about Google. Examples would be Google. Other example could be Jumia. Also provides a platform upon which people, buyers and sellers, do meet to transact their business.
So does this mean it's extra tax? Because does it exempt anyone maybe who has a physical office, really?
No, it doesn't. Either you have a physical office or you are just, but you don't have a fixed place of abode, isn't it? But you are actually operating business in Kenya. Yeah, you are operating online, and therefore either a resident person or a non-resident person would actually be required to be subject to this tax. At the end of the day, you can either be a person who is resident when it comes to a person who is physically in Kenya, or a person who is not physically in Kenya but able to transact business in Kenya. Yes, by facilitating the meeting of the buyer and the seller. So at the end of the day, these are the persons whom we are actually looking for purpose of payment of digital tax.
For the sake of the Kenyans who might want to know, if say you have a shop, a shop selling clothes, and you are promoting your shop online, and even making sales through the online platform, maybe Facebook or Twitter, whatever it is, do you also need to pay this tax?
You are the seller of the goods.
Yes.
No, it is the person who is the provider of the platform, because it's actually digital stuff. You know, we're talking about the service.
So at this point, maybe it's the Facebook or the Twitter that will pay the tax?
Yes, that will be required to pay the tax. Okay. Because as for you, as the seller who is selling through that platform, you are actually paying a fee for selling through that. Yes. It is not for free. Mm-hmm. Yes, it is not for free at all. Yes, because it is a marketplace. It is it's a person's shop. And therefore, you go and take your items, your merchandise to that shop. And when you take them, they would actually be charging you either storage fee, which of course in this situation now, you are not actually, there is no physical product that is being stored, but it is physically, you are, okay, you know, they open a place for you. You are advertising, isn't it? Right. Yes, they open a place for you. That means they slot you in their pigeon hall, in their pigeon halls that they have. They actually open a place for you, and that is why you are paying. So your clients would actually be able to visit your pigeon hall, download what they want, look if they are interested in it, and if there is a clause in terms of service, there is a clause of business, then you will be able to pay now. The person who is hosting you, who has given you the pigeon hall where you have money to sell, then there is a fee that you pay, and therefore that is the fee that we are actually talking about. Okay. Yeah, not the person who is selling the good. No. So
could you just clarify to Kenyans that this tax is not here to kill digital businesses?
No. The tax that we are talking about here does not kill digital businesses at all. It is not being killed, but you are just contributing also to development of this country. You are actually enjoying the services that the government do provides, and these services are not they are provided for free or at a very minimal fee. But actually, who is supposed to be? The government does not do any business. That is one thing that we Kenyans need to understand, that the government does not do any business. And therefore, when it comes to issues like, oh, we want the government to do this, we want the government to do this, from where? The government is not doing any business. It is actually you, as the citizens of this country, who is actually supposed to fund the government by paying your taxes. You are funding the government by paying your taxes, and you now go and ask the government, we want roads. So in other words, even these digital business persons are also contributing, because there isn't any person who earns an income that is not supposed to be subject to tax. Even biblically, from the time immemorial, you are supposed to pay your taxes. The digital economy is not actually being killed by being asked to pay the taxes. In fact, the digital economy at the moment is the driver of our economy. Each and everything that we do it through electronically or digitally. Even when you are paying our taxes to Kenya Revenue Authority, we are actually telling you, you have a phone, yes, can you pay your taxes through that phone? And in the process, you will now find Safaricom, who is hosting you, who is actually required also to pay the tax.
And when does this tax come into effect, and how often is it paid?
Digital service tax will be rolled out on 1st of January 2021. So that is the effective date, and therefore, as at now, the people should actually be oiling themselves, gearing towards a cruise. We want to take off in January, and therefore, those people who have not registered now, you need to register and indicate that actually you are a person who is offering digital services, and as a consequence, you need to register. So that come January, you are actually ready for takeoff.
Okay. So as we come to a close of this interview, what is your rallying call to Kenyans now?
My rallying call to Kenyans, I say, dear Kenyans, what you need to understand is that this is not a tax. Taxes is not being collected for and on behalf of Kenya Revenue Authority. Taxes are collected by Kenya Revenue Authority on behalf of the government of Kenya, which is charged with the responsibility of providing services to you. in terms of security, in terms of education, in terms of any other development projects that you want the government to undertake. So it is your responsibility as Kenyans to heed this call to support the government in mobilizing resources for purpose of developing our country. Because it is said, kulipa ushuru ni kujitegemea.
Kulipa ushuru ni kujitegemea.
Yes.
Thank you very much for speaking with us.
Welcome.
Well, that was
Asante
sana. That was Charles Cheruiyot. He is the manager in charge of policy and tax advisory at the Kenya Revenue Authority, and we have been speaking about matters digital services tax as well as minimum tax. Be sure to register if you know you just qualify to pay those taxes to ensure that the deadline does not meet you. Thank you very much for watching. Continue watching Business Insight. I'm Betty Kitu.